Ladies and gentlemen, good day and welcome to Solar Industries Q3 FY23 earnings call hosted by ICI Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions later during the presentation. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. I will now hand the call over to Mr. Amit Dixit of ICI Securities. Please go ahead.
Yeah, hi. Good evening, everyone, and thanks for attending this call. I thank Solar Industries for giving us an opportunity to host this call. Today evening, we have with us Mr. Manish Noble, CEO and MD, Mr. Suresh Menon, Executive Director, Mr. Monish Agrawal, Joint CFO, Ms. Shalini Mandana, Joint CFO, and Ms. Achal from Investor Relations. So without much ado, I would directly pass control to Ms. Achal for taking this forward. Over to you, Achal.
Thank you so much, Amit. Good evening, dear investors and potential shareholders. Warm greetings in the new year. We had a fantastic year in 2022 and hope to have a similar one in 2023, and we will the same for our investor fraternity as well. I am Achal and I welcome you all to earnings call of Solar Industries India Limited to discuss Q3 earnings. Joining us today on this call is MD and CEO Mr. Manish Agrawal, Executive Director Mr. Suresh Menon, Executive Director Mr. Milinji Deshmukh, Joint CFO Mrs. Shalini Mandana, and Mr. Monish Agrawal. Please note that certain statements concerning our future growth consist of forward-looking statements regarding our future business expectations intended to qualify for the safe harbor, which involves a number of risks and uncertainties that could cause actual results to differ materially from those in such forward-looking statements. Now I request Mr. Manish Agrawal to give opening remarks on the performance of the company. Over to you, sir.
Thank you, Achal. A very good evening to all the valued stakeholders. On the backdrop of strong performance by our international and institutional businesses, the revenue for the quarter stands at rupees 1,812 crore, which is up by 78% year-on-year basis. And 9-month revenue stands at rupees 4,994 crore rupees, up by 90% year-on-year, and the net profit is up by 109% year-on-year for the quarter and 110% year-on-year for the 9 months, which stands at rupees 219 crores and rupees 591 crores respectively. Defense revenue has crossed rupees 100 crores for the consecutive second quarter and progressing towards yearly turnover of around rupees 400 crores. Our company has participated in various RFPs, which includes RFP for one of the Pinaka variants and RFP for drone-based loitering ammunition. The defense order book now stands at rupees 817 crores. The company intends to offer its products for space application, has also started showing results after the successful launch of Vikram S and static test of rocket motor made for ISRO. The company intends to expand it further in the coming years. Amid geographical tensions, the risk of higher interest rates, economic slowdown brings in overall volatility in the business environment. Despite of these challenges, our quarterly and 9-month revenue numbers gives us confidence to revise our annual growth guidance from 50% to over 65% for the FY23. Going forward, we will stay focused on expanding our core businesses through continuous strategic investments to enhance the stakeholders' value. Now I am handing over to Achal to take you through the summary of financials. Thank you.
Thank you so much, sir. I'm extremely happy in presenting the numbers of a quarter where we have crossed the revenue of 1,800 crores and profit of 200 crores for the first time. It grew at 78% year-on-year in quarter 3, registering revenue of 1,812 crores versus 1,018 crores. EBITDA is at 357 crores, up by 93%. PAT is at 219 crores, up by 109% year-on-year, demonstrating the strength of our business. Now let's quickly review the quarter in detail. Explosives. The domestic volume in the quarter has increased by 17%, that is 1,22,000 metric tons compared to 1,04,000 metric tons. And our realization of explosives is up by 46%, that is 71,000 tons versus 49,000 per ton. As such, explosive revenue was up by 71% from 514 crores to 876 crores. Revenue from initiating system was also up by 32%, that is from 101 crores to 133 crores. Coming to our customer basket, revenue from CIL was up by 64% year-on-year from 192 crores to 314 crores. Revenue from non-CIL institutions was up by 133% year-on-year from 147 crores to 342 crores. Revenue from housing and infra was up by 41% year-on-year from 215 to 304 crores. Export and overseas revenue grew by 93% year-on-year from 377 crores to 729 crores. Defense revenue was up by 51% year-on-year from 73 crores to 110 crores. Coming to our cost breakup, raw materials. The percent of raw material consumption is 63.55% versus 58.92%. In absolute terms, the cost grew at 599.77 crores versus 1151.45 crores in the same quarter previous year. The percent of employee cost is 5.06% versus 6.62%. In absolute terms, the cost is 91.71 crores versus 67.39 crores. Other expenses percentage was at 12.09% versus 16.97% as a percentage of sales. In absolute terms, expense cost is 219 crores versus 173 crores. The interest cost is almost 25.46 crores versus 13.41 crores, and the percentage is at 1.41% versus 1.32%. Coming to the highlights for 9 months, we registered revenue very close to 5,000 crores, that is 4,994 crores, which is up by 90% year-on-year. EBITDA at rupees 952 crores, up by 89%. PAT at rupees 591 crores, which is up by 110% year-on-year. We have also given our investor presentation with detailed numbers. Now we would be very happy to take any questions, comments, or suggestions that you may have. Over to you, Amit.
Yeah, hi, Chris. Can we have questions now?
Of course, sir. Ladies and gentlemen, if you do wish to ask a question, please press star and then 1 on your touchtone telephone. If you wish to withdraw your question, please press star and then 2. Participants are requested to use handsets while asking a question, and we ask that you please limit your questions to 2 at a time, and you are then welcome to rejoin the queue. Our first question is from Garvit Goyal of Invest Research. Please go ahead.
Sir, what shall be the overall PAT margins by the financial year 23, and by going forward, what will be the revenue growth and PAT margins stated by financial year 24 and 25?
Yeah, for the current year, we are given a projections of 11% to 12% for the PAT margin. And for next 2 years, we'll come up with a growth guidance in our quarter 4 results.
Okay. My next question is, what are the drivers for the value growth in the domestic explosive business? As 1 year ago, the rates were the 43,962, and now it is 71,793. So how sustainable these rates are going forward for say next 1 to 2 years?
Ma'am, I'm so sorry. Can you just come up with the questions little slowly? We are just unable to hear it clearly.
Okay. What are the drivers for that value growth in the domestic explosive business? As 1 year ago, rates were the 43,962, and now it is 71,793. So how sustainable these rates are going forward for say approximately next 1 to 2 years?
Yeah, like you have mentioned that in this quarter, our volume has increased by 17% and price increase was there by 46%. Going forward, as we are expecting that commodity prices should start correct, and accordingly, our finished good prices will also get corrected. And because it is our finished good prices are linked to the key raw material prices like ammonium nitrate and fuel oil. So at this moment, it is not a certainty that prices will fall in a particular percentage. So as we move forward, we will keep giving or revising our guidance. But as far as next few years are concerned, we believe that there will be some corrections, but it should stabilize in next 1 or 2 quarters. And based on that, we will give you the future guidance.
Thank you very much. Our next question is from Noel Vaz of Union. Please go ahead.
Hello. Congratulations on a good result. So I just have one question which is specifically relating to the order book which is given. So in your presentation, it is specifically mentioned that your order book at the end of the third quarter stands at 3,389 crores, right? And so this is a sequential decrease over the second quarter. So I'm just trying to understand how should we see this order book move going forward, and how would it exactly relate to, does it relate to your revenues going forward as well?
Yeah. So the order book, for that, the defense order stands at 817 crores, and the rest order of around 2,572 is from CIL and Singareni Collieries. Generally, these orders are received for a period of 2 years. So for CIL, the next order will be coming in the month of October 23. So till that period, the order is there from CIL, and for Singareni, it will come in 2024 April. So till that, the orders are in line with what Singareni Collieries also. So and 1.5 year orders for Singareni Collieries are captured in this.
Okay, so basically SCCL 1.5 years orders are reflected in this 3,300 number, as well as CIL's 1 year number, right? Okay.
Yeah.
Okay, fine. And basically, if I simply put at the end of that period, then again, that this order book again will be fresh, so to say.
Yeah.
Okay, fine. And also just one more thing, I just wanted to try and understand just generally how your pricing mechanism works. Generally speaking, when there is a increase in the raw material cost, within how much of time period is there a lag, or is it an immediate pass-through in terms of raw materials?
Yeah, we have contractual obligations with the customers. So generally that lies in between 1 month to 3 months. So in rising as well as falling trend, there's always a lag of that much period.
Okay, thank you. I'll just go back to the queue.
Thank you.
Thank you very much. Ladies and gentlemen, just a reminder, if you wish to ask a question, please press star and then 1. The next question is from Bhaja Sharma of Invest Research. Please go ahead. Bhaja, your line is open. Would you like to ask your question? My apologies, it would appear that there's nothing on that line at the moment. Ladies and gentlemen, again, if you wish to ask a question, please press star and then 1 on your touch-tone phone. Our next question is from Dhananjani Bagrodia. Please go ahead.
Hi, sir. Congratulations on great set of numbers. Is international volume growth significantly higher?
It is in line with our annual guidance. We have spoken that the volume growth will be in the range of 15 to 20%. So even international business is in that line.
Okay. So is in line with 15-20% as rest of the business.
Yes.
Okay. And sure. And my follow-up question is, so what would be the current inventory debtors and payables?
So the current working capital days are around 100.
Okay. And how would you see that ending to the end of the year?
So we see around 90 to 100 days of working capital cycle.
Okay. Okay. And one second. 90 to 100 days. And so current realizations are down or stable Q on Q? What we are seeing right now?
It's stable Q on Q.
Okay. And lastly, sir, what is the capex in Q3?
Capex, the current capex in Q3, current till 9 months, the capex is around 350 crores.
350 crores.
Yeah, and the annual target is around 450 to 500.
Okay, annual target is 450 to 500. And ma'am, what would you expect that to be for next year?
So this quarter we have revised our guidance for the current year to around over 65%. So next year will come up in quarter 4 results.
Thank you very much. Ladies and gentlemen, we do just remind, please ask a few questions at a time, and then you're welcome to rejoin the queue. Our next question is from Puneet Kabra, who is an investor. Please go ahead.
Yeah, hi. Congratulations on another great set of numbers this quarter. Question I have is, if I have to take a 3 or a 5-year view, considering what Coal India is planning in terms of capex, mining, government initiatives, private mining in coal, so you know it all more. What kind of volume growth can we expect for this industry in the next, couple of years or 3 to 5 years? What kind of volume growth would be a reasonable number to look at?
We have been repeating or giving our projections of growth as far as volume is concerned. We still believe that we should be able to achieve a growth of 15, 16%, 17% year-on-year basis for next couple of years, because there is plenty of demand from coal mining, which we all are aware of. So that gives us a lot of confidence in giving such kind of guidance that we are expecting a growth of around 15% in volume terms.
Thank you. Thanks a lot.
Thank you.
Thank you very much. Our next question is from Sanjay Sapati of Ampersand. Please go ahead.
So I couldn't get in earlier because of some link issues. So I may ask some questions which could be repetitive. So just first thing is that you have given a guidance of 65% growth. I'm assuming that it is at least 65% because otherwise Q4, which is traditionally a seasonally biggest quarter, you are looking at a significant decline compared to quarter 3. Can you please confirm that?
So we have given a guidance of over 65% for the year 23.
So my question is that will you continue to do this 15-17% volume growth, which you said that you will be doing each year for next couple of years? Will that continue in quarter 4 as well? And are you seeing some kind of a decline or dramatic change in realization or in raw material cost?
Yeah, as regards volume, we do see 15 to 17% growth. And on the basis realization during the quarter, the realizations were stable. But yeah, since the raw material, that is especially the ammonium nitrate, is already at very highly elevated level, we see that should come down and subside in coming quarters.
Ammonium nitrate?
Yes, that is the basic raw material for us.
So if that falls, then it will be a pass-through. So it can have some kind of an impact on your revenue or realization, but your overall profitability per unit may continue to be as good or maybe better. Is that what we should conclude?
Yes, that is correct. At highly elevated prices, the margins are generally less as compared to when the prices are stable.
Okay. But does it affect your unit profit, that is in terms of rupees per ton of explosives that you sell?
We generally do not look in that way. For us, when we speak of margins, we see the EBITDA margins, for which we have given a guidance that at average level 18 to 20% should be there.
Thank you very much. Ladies and gentlemen, again, if you wish to ask a question, please just queue again for a follow-up. The next question is a follow-up from Concall of Invest. Please go ahead. Robert, your line is open. Would you like to ask your question?
Hello. Hello, am I audible?
Yes.
Thanks for the follow-up opportunity. My question is, in last 1 year, volume growth in the domestic business has been 13%. How sustainable this volume growth is by going forward?
I have already answered that we see a sustainable volume growth of around 15 to 17%.
15 to 17%. Okay. And what is the drivers for the export businesses, as year on year for 9 months, there is an increase of 97%. What is the expected growth by going forward in next 2 to 3 years?
Yeah. Our export will continue to be growing as indicated to you, giving us an overall growth and EBITDA level at 18 to 21%. So we expect the same kind of a growth to take place for in the near term.
You are saying 18 to 21%. I am right?
EBITDA level, yes. Which translates to that. Exports translating to 11. Yeah.
Okay, sir. Thank you, sir.
Thank you very much. Our next question is a follow-up from Noel Vines of Union. Please go ahead.
Yes, I just wanted to know what exactly are the capacity expansion plans over FY23 and even the medium term. If you can give me some kind of color on that in terms of broad capex, say, over the next 5 years, or maybe in just a volume number, that will be very good. Thank you.
So our current year capex plan, like Shalini has mentioned, that we are targeting around 450 crores or maybe around 500 crores. So it will be in that range. And in coming years also, for next couple of years, we believe that our capex program will run around 450, 500 crores levels on annualized basis. And our major capex programs are for increasing the defense product portfolio, increasing the geographical presence within the country, and increase our international presence in either new territories or expanding the current capacities of our major geographies where we are present, like Turkey, Nigeria, and South Africa, and Australia.
Okay, so I'm just trying to understand. So when you are expanding into these international markets, I mean, what exactly are these? I mean, what is the capex or what is the investment that goes into setting up these kind of international businesses? Because I may be completely wrong, so you can just tell me where exactly I'm wrong. But it just seems as though you just need to set up like a sales or a marketing division over there, or is there something more to it that I'm missing out on?
Yeah, we have each country operating on their own and taking decision at that level to grow the business. The growth in the business could be within the region that they're operating and the nearby region that they are. So we have a separate set of people in each country to handle this business.
So we're talking about a separate plant as well in foreign countries as well, right? I think that is also the Okay. And with this, just one trying to understand, so these international businesses, these are also for defense, or these are for civilian applications?
No, this is for only civilian applications.
Thank you very much. Ladies and gentlemen, again, if you wish to ask a question, please press star and then 1. Our next question is from Aniket Mittal of SBI Mutual Fund. Please go ahead.
Yes, thank you for the opportunity. Just a few questions. One is on the overseas business. I recollect we were planning some expansions in Australia and Indonesia. If you could throw some light as to where we are on that.
Yeah, our expansions in Australia and Indonesia is online now. We expect our Australia operations to start in Q1 of financial year 24. In Indonesia, we have partially started and partially is on way. We wish we should start in the year Q1 of 24 also.
Okay. And what are the capacities that we've set up over here?
We don't share the capacity for each product country-wide. It is generally we share the territories where we are expanding, and on overall basis we give a growth guidance. That's all.
Okay. So one is maybe for the current year itself, we've been seeing a fairly decent growth in the international market. If you could just highlight, certain dynamics in the individual geographies as to how they are planning, what is the growth that you're currently seeing within those geographies. Maybe from a volume perspective itself, that would be helpful.
So the growth from international market is coming from couple of factors. Like first is volume growth of around 15 to 20% in various product ranges. And second is, like we have said that in last couple of years, we were investing in start the new territories. So those territories have started giving us. And in future, we are planning to expand in the nearby markets. So all these three factors are giving us growth from international market. And in future also, similarly, we will keep growing.
Thank you very much. Then the next question is from Prashil Gandhi of Nirmal Bang Institutional Equities. Please go ahead.
Yeah, hello, am I audible?
Yes.
Sir, my first question pertains to the interest cost, net debt levels. Could you highlight what is the net debt level for third quarter, at the end of third quarter?
So for the group level, it's around 1,400 crores.
14 billion net debt.
So the net is 1,258. That was gross.
Okay. And my second question pertains to the interest cost. We have seen a huge jump in interest cost for the quarter. So is this something that we need to assume for quarters going ahead, or this is just a one-off and we can expect the interest cost to come down?
So the interest cost, already the repo rates have been going up. Can you hear me?
Yeah.
Yeah, the repo rates have been going up, and in the quarter earlier, the average cost of borrowing was less. So around 2.5% repo rates have increased. So as a result, the interest cost has also increased.
Okay. And my final question pertains to the drone-based loitering munitions. So could you highlight the potential market and what revenue potential that we can expect from this segment over next 2 to 3 years?
It is very difficult to give any such kind of guidance on what can be the potential for drone-based ammunition. But like we have been mentioning that company is increasing its product portfolio for a variety of applications. So drone-based ammunition are new age technologies on which company is investing. And like we have mentioned that few of our products are qualified and we have participated in various RFPs for these products. And once we receive any significant orders, commercial orders, we will definitely share with the stakeholders.
So would you highlight the competitive intensity in this space? Are we the only players, or how is the competitive intensity in this place?
We are yet to receive any kind of official information that who else are participated. So it is difficult to share at this stage.
Okay. And my final question pertains to market share. Could you highlight market share of key overseas geographies? What are the current market shares that we have?
We don't have the market share of each country wherever we are operating. So it is difficult to answer this question.
Okay. Okay. Thank you very much and wish you the very best for the future.
Thank you very much.
Thank you. Our next question is from Jinish Karia of Antique Stock Broking. Please go ahead.
Yes, thank you for the opportunity. Sir, if you can help us with the reason for decline in the gross margin on a year-on-year basis.
I mentioned that in this year also, although the raw material prices are at a highly elevated level, despite of these factors, we are expecting margins to around 18 to 20% level.
So that was EBITDA. The point I was trying to make is that is there any inventory loss that has been incurred during the quarter?
So if you look at our annual guidance, what we have shared is that the revenue which we are targeting to grow more than 65%, and even if factor the growth into our revenue side, and what we are saying is that we are expecting EBITDA margins of around 18 to 20%. So we have also said that there is always an inventory which we have to carry to run our operations, and there are always some contracts which keep going on with our customers. So as we carry inventory, there are also contracts which are still running conditions. So every month or every quarter there are some escalations, and accordingly our inventory will get adjusted to those customers. So we don't see much impact due to these factors.
Okay, understood. And so one last question. I see that the other expenses has declined on a sequential basis. I'm not sure if you have answered this earlier. So if you could just help me with the reason for decline in other expenses on a sequential basis.
So if you capture the material consumed and other expenses, then both are moving in a similar range what we have seen in last couple of quarters. So we don't see much change on that account. And all these changes are happening because of changing either customer mix or product mix.
Understood. So thank you so much for that.
Thank you.
Thank you. The next question is a follow-up from Dhananjay Bagrodia. Please go ahead.
So most of my questions have been answered. But just on the other flip side, is there any risk we see in terms of global slowdown? And are we seeing that anything in terms of the maybe order inquiry pipeline or how customers are reacting?
We have factored in various kind of challenges, whatever we can foresee. And based on those challenges, we have given a guidance which we have issued that in this financial year, we are targeting to raise our revenue by over 65% in this year. So I think that captures the variety of challenges which we are facing at this moment.
Okay, sure. Thank you.
Thank you very much. Ladies and gentlemen, just a reminder, if you wish to ask a question, please press star and then 1. Our next question is also a follow-up from Sanjay Sapati of Ampersand. Please go ahead.
Can I just ask what is the top country that you export to from here in India?
We don't share the country revenue, country-wise figures which we are.
I'm just asking about the name of the country.
I'm
just asking the name of the country, that top 1 or 2 country that you export to.
So that also we don't share.
And the thing that just wanted to confirm from you is that which just mentioned that you are getting into Australia and Indonesia. So, am I to understand that you didn't have much of revenue from these two geographies till yet?
Yeah, you can assume like this, that these countries are yet to start. So revenues from Australia and Indonesia is yet to capture fully into our revenue numbers. So these territories are at a very nascent stage. We are expecting revenues to grow up from these markets in coming years.
And as far as your exports are concerned, bulk of it is for coal, or like say, or it is diversified?
Our exports are mainly from India to our overseas subsidiaries, where we have geographical presence. And apart from our overseas subsidiaries, we are supplying to a variety of customers, and those customers spread to almost over 60 countries. And most of the
Are you supplying for coal mining predominantly or for non-coal usage?
It's a mix of usage. Some of them are for coal, but most of them are for infrastructure-related activities.
Okay. And the same thing which you will try here in Australia as well. And when you were giving the guidance of 15 to 17% growth overall, can I ask that how much you are looking at within India and how much exports will continue to grow?
So this was your last question. I will answer to that. So we are expecting volume growth of 15 to 17% in India and outside as well. Thank you.
Thank you, sir. Then our very last question is from Prashil Gandhi of Nirmal Bang. Please go ahead.
Hello?
Yes.
Well? Hello?
Hello? Yes, please go ahead.
Yeah. So just a question. So for earlier calls, we were guiding for a 25% value growth over medium term. So with expectation of ammonia nitrate prices correcting and henceforth that expectation of our realizations to come down, so do you still maintain that guidance?
Yes, after capturing all these kind of scenarios, we believe that we should grow by over 65% in this financial year.
No, sir. For the coming quarters of over medium term, we were maintaining some 25% growth guidance over medium term. So could you highlight that?
So we have shared that we are targeting a volume growth of around 15 to 17%. And as far as value growth is concerned, it is difficult to share at this stage, which we will definitely share once after Q4 results are over.
Okay. Thank you very much, sir, and wish you the very best.
Thank you very much.
Thank you very much. Ladies and gentlemen, we have reached the end of our question and answer session, and I would like to hand the call back to management for closing comments.
We appreciate the time given by everyone. Thank you so much. See you again in the next quarter.
Thank you very much. Ladies and gentlemen, then on behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.